I'm glad to see everyone again on my channel. For those who don't know me, I'm Alex, financial advisor and portfolio manager. And today I want to talk about what has happened in the stock market over the past couple of weeks in terms of macroeconomics, global news, and corporate events. So, first of all, you can congratulate me. I opened an account with the world's largest broker, Charles Schwab. I did it partly for diversification and partly to get access to the best trading and option analysis platform called Thinkorswim. As you know, Schwab bought TD Ameritrade a few years ago, and now Schwab clients have access to the really cool trading terminal. I've already poked around in it a little, and to be honest, didn't understand much anything. I'll keep figuring it out. So as you can see, my account is empty now. So before we begin, small disclaimer. Please subscribe to my, first of all, YouTube channel and like this video if you haven't already. This very simple action for you will help me a lot. And also, as you can see, I run a Twitter account where I post news I find interesting, along with charts, data, and statistic. So if you are on Twitter, follow me there as well. I will be very happy. So let's start with macro. As you can see, there wasn't much data in the first half of October. I suggest we focus on manufacturing PMI. It's fairly important economic indicator that shows how the country's industrial sector is doing. PMI stands for, here we go. PMI stands for Purchasing Managers Index. It's calculated by surveying managers of factories and plants about production, about orders, about prices and deliveries. So very simple example. If PMI rises, it means factories are receiving more orders, hiring workers, and purchasing more raw material. The economy is coming to life. If PMI falls, companies receive fewer orders, cut production, and stuff. That's warning sign for us, for investors, right? So, as you can see, indicator ticked up to 49.1 point in September from 48.7 in August, slightly above analysis expectations of 49. If we look at a longer term picture, for example, for 10 years, as you can see, we have a big dip during the COVID, then strong growth, and then plateau, right? Okay, moving on to shutdown. On October 1, 2025, the US federal government went into shutdown, a temporary halt in funding because Congress didn't manage to extend the budget. This led to halts in the release of official statistic, inflation, unemployment, retail sales, and so on, making forecasts more difficult for us, for investors, and of course for Federal Reserve. Despite this, market continued hitting all-time highs in the first days of October. because investors expected the shutdown to be short-lived. Actually, I found this statistic about most recent shutdowns and their duration since 1980s and the market's reaction after the end. So, as you can see, the average duration of a government shutdown is just over 1 week, 7.6 days. And the market reaction over the following over the following 12 months is mostly positive and averaging plus almost 20%, 19.1%. So I guess nothing to worry about, at least for now. Okay, moving on. That was a massive jump in AMD stock. AMD announced a multi-year agreement to supply hundreds of thousands of AI processors to OpenAI. Reuters reported that under the deal, OpenAI has the right to buy AMD shares at $0.01 per share. AMD's expected revenue from the deal is estimated at around $100 billion, which led to this jump in 48% increase in its shares. Actually, it was a record jump in 9 years. So let's look at the chart and be happy for investors who had AMD in their portfolio, right? As you can see, the rise was from like $165 to almost $240. I wouldn't buy AMD at current levels, at least for now, because of its phenomenal P ratio of 125. Although the forward P is more reasonable, about 35, it's still a little expensive for me. So this week marks the start of corporate earnings season, and as always, the banks and the financial companies go first. As you can see, this week start with earnings of JPMorgan, Wells Fargo, Goldman Sachs, BlackRock, Citigroup, and so on. And Bank of America and Morgan Stanley goes next. We will break them down next time in the next couple of weeks. So don't forget to subscribe if you won't miss it. That's all from my side today. I hope you enjoyed. Don't forget to subscribe to my channel. Ciao, ciao.